is Thursday, February 20th. I thought today was Friday. I mean, I completely thought I missed the USA versus Canada hockey game. That is tonight at 8 p.m. on ESPN. And if you didn't watch the first game, within 90 seconds, 6 fights. Not that I'm looking for, I'm not like a blood sport gladiator, like, in the Roman Empire where you're waiting for these guys to fight. But for an all-star game, this is pretty, look at the all-star game for the NBA. Look at the all-star game for the NFL. Look at the all-star game for Major League Baseball. These guys during this all-star break for the NHL, they care. They care. And the NHL just got it right. I was watching Rich Eisen yesterday, and yes, they got it right. I mean, you're booing during the American national anthem, and then the players come out and they just, these are best friends. They understand hockey, and I do understand hockey. It's great. You could literally beat the shit out of somebody and then go out for a beer afterwards with them. It's the competitive nature of the sport. Do I think that the fighting is necessary? No, but listen, these hockey players kind of grow up that way. It is what it is. I'm never gonna, stop wanting to watch the fights and get psyched up when they do fight. So it's really good. I suggest you watch the game. And if you don't know hockey, it is one of my top 2 sports. The top sport is NFL, but I like it. I like it a lot. So today we're gonna go over a lot. Biggest movers of the day. Earnings, Carvana, Palantir, we're going to go over all of that. Apple launched a new freaking iPhone. SMCI, I'm going to go through how yesterday my girlfriend asked, hey, should I rebuy SMCI? What did we do? What did we do to look at it? SOFI, what does AI say that the price of SOFI is? A couple of stocks that are they looking good? HIMS, AXON, some of these big movers. Paid members, you are going to get a look into 10 core portfolio stocks that look good on the weekly charts as ones that might be getting set up to move higher. We're going to look at specific earnings: Toast, Baba, Walmart, NVDA next week. Walmart reported great earning. Buy the dip. I'll just ruin it. If you're not a paid member, buy the freaking dip on Walmart, just so you know. That's just profit taking. Walmart is a great stock. And I'm going to look at one undercover AI infrastructure play that I just found because it had earnings today. I know nothing about this, nothing. Okay, so I went down a rabbit hole this morning for about 20 minutes, and it makes me want to buy this stock. It's got a strong buy in the quant. It's got a strong buy from Seeking Alpha analysts. Wall Street says it's a buy with 13% upside, and it might even be higher because since I started talking, I think the stock has moved down. It's not on my screen. We're looking at QQQ. So just so you know, yesterday, QQQ, we did hit an all-time high. The 540 was an all-time high. Again, the algorithm got you in at 525. Have a strategy. There are plenty of strategies out there for QQQ. I buy when the 4-hour algorithm tells me to, and I buy and hold. Do I get out? My plan on getting out is around a weekly or a monthly candle. Do you see a time when you would have gotten out recently on a weekly or monthly candle? Maybe when you push down on this 9-day here in July, but the trend is still intact. We're still over that 9-day on a weekly. We still have an extended MACD. We still have an RSI at 64. Would you get out or would you add to this? All-time highs lead to all-time highs. It's as simple as that. And I thought this was a great discussion. This was the Animal Spirits podcast. And the question is $1 million a lot of money? I put it out there yesterday on Twitter. Go and answer. Go and answer. I'm not going to. I think I might be out of touch. My personal. Well, let me go into it. I do think $1 million is a lot of money. I do think it's a tremendous amount of money. If I were 20 years old and I heard somebody had $1 million, I would think they were rich today. If I were 30 years old and I heard somebody had $1 million today, I might think that, okay, they're on their way to wealth, but they're not really wealthy. 40 years old and you have $1 million. I think, you're going to retire okay. At 50 years old and you have $1 million, I think you just didn't save enough. I mean, that's my thought on it. I think it's an interesting question. Again, go and comment on Twitter's biggest movers of the day. It's earnings. I mean, Bausch, 8% on better than expected earnings. Herbalife, 18%, better than expected earnings. Alibaba, better than expected earnings. They beat expectations. Palantir, we're going to talk about Palantir for the paid members, but they're going to cut 8%. I'll ruin it for you. Buy the freaking dip. I think, Hegseth cutting 8% of the annual defense budget. I think that does well for Palantir. I think that's an AI. Hey, let's spend more money on the software to tell us where we can cut. Simple as that. Carvana, down 10% despite a strong Q4 performance. If this is a stock that you like, maybe go into it. Walmart, they dropped 7%. They're continuing to drop. Buy the dip. I'll go into that one for the paid members. Now, big thing happened yesterday from my portfolio. Apple unveiled a new iPhone 16e starting at $599. Comes with USB-C. It comes with the artificial Apple Intelligence. It can run. It also comes with a new Qualcomm chip. Is this bullish for the stock? Well, it was up 0.16 yesterday. It didn't move the damn stock. Again, if the stock was at 220, this would have moved the stock. The stock is at 244. The algorithm got you in at 231. Did I add a 231? You damn well bet I added a 231. Did I buy a boatload of it? Absolutely not. I have a tremendous amount of Apple. In fact, this dividend X date right there, I get thousands of dollars of Apple stock. What do? It goes right back into dividend reinvestment. So I bought probably tens of thousands of dollars of stock that I didn't even know about on February 10th. I didn't know, but it goes and it buys it. So if the stock was at 230, if the stock was at 220, this news would have pumped the stock. The stock at 240, it's not going to pump the stock. What's the Wall Street price target on this one? It's 252. That's 3% upside. It's not very big. The valuation is stretched. The growth is minimum at best, but they make a tremendous amount of money. And with a cheaper iPhone, I think you do get some people upgrading. I have a 13 Pro. I could buy hundreds of thousands of Apple phones. I don't. I have a 13 Pro. I'm perfectly happy with the 13 Pro. Somebody like me who has a Mac Mini, an Apple, an iPad Pro, an Apple Watch. I have AirPods in the other room, and I have an iPhone. I'm sucked into the Apple ecosystem. I have a MacBook Pro. I am in the Apple ecosystem. I have not upgraded the phone. Okay? There are billionaires. I know. David Sachs, the guys on All In Podcast. None of them have upgraded to the 16. Okay? And all of them could. But nobody sees the need to. Does this one at $599 get you to think about it? Absolutely, it gets me to think about it. Am I going to spend $599? No, I'm going to go into the store and my ass is going to buy the 16 Pro. But I'm probably waiting for the 17. Just full disclosure, I'm waiting for I want USB-C. Honestly, it's the USB-C thing that gets me. Now, Gene Munster, the takeaways. One, it will run Apple Intelligence starting price of $599. Higher than the $429 launch price of the iPhone SE, but lower than the $799 of the iPhone 16. Okay, you save $200. That's going to get some people in there. The 16e will likely account for 10% of revenue, surpassing the SE, which currently makes up about 7%. That incremental revenue should provide upside to the street's current expectation of 1% iPhone growth. Again, small. But when you're talking about these numbers, it's big, big dollars. For the first time, the 16E will feature Apple's own cellular modem chip. This is why I thought Qualcomm would fall. Okay, I'd expect this chip to be included in the iPhone 17 this fall. The big news was that the battery life on this phone will be significantly longer, and it's based on this chip. shifting away from Qualcomm should slightly boost gross margins. Again, shifting away from a supplier to their own developed chip is going to, they can charge the same price, for the phone. They're not lowering the price because their cost goes down. Again, Apple, in my mind, I think it's a good play. It's just my safety net. This is my savings. So my girlfriend asked me yesterday, what about SMCI? So because I know about SMCI, I said, you know what? I'm going to go into Perplexity and I'm going to say, what's the date of filing for SMCI to keep their NASDAQ listing? And so Perplexity told me, hey, it's February 25th. Let's pull up the chart of SMCI because, again, this is a company that has a tremendous history with the hyperscalers and everybody providing them the data racks that are needed to launch NVIDIA chips. And you can see here, we've still got a long way to go. You closed yesterday at 60. Where are you trading today? You're trading at 58. It's down 3%. But that February 25th date, which is next week, looms large, okay? They have said that they can provide the report that they can continue their listing. If they were lying and they can't get it done, the stock is back down at 30, okay? It might even be back down at 17. But nobody is not ordering from this company. That's what the earnings told us. So I said, you know what? What if I didn't know about this, so much about this? Because sometimes you can know too much. And yes, I know too freaking much because the algorithm told me to buy at 31. Did I buy at 31? No. That was February 5th. That was 15 freaking days ago, and I could have doubled the money that I put in. So what is a major issue with SMCI stock? And it goes over it. This is an example of using the tools that are out there. This isn't a paid tool. This isn't TrendSpider. This isn't Seeking Alpha Premium. This is Perplexity.ai. This is available to everyone. In fact, Tim, I think it was Tim in the Facebook group, he put in there that the end of last week, he said to ChatGPT, hey, what's the one stock that's reporting next week that's a great opportunity? It told him BABA. He went out and bought BABA. He's rewarded. I wouldn't suggest that particular question to ask, and I would suggest a little bit more research. But again, use the tools that you have. The concerns, potential accounting manipulation, risk of loan default, CEO compensation structure, regulatory scrutiny. Doesn't list the delisting. But again, it does list. It does postpone filing its 10K. The delay led to resignation of the auditor, Ernst & Young. It goes over the entire thing. So Perplexity got it right. And then I went in and asked it additionally, well, I guess I didn't ask another question, but is this one that fits your risk tolerance? For me, no. No. You just got to do the work. For me, I'm not getting into this one. For other people, it might be something that they want to do it. And then I would have said, hey, what does the 4-hour algorithm do? Well, let's backtest a technical strategy. Because right now, you don't know about the fundamentals. You don't know if they're going to have to restate it. But I would say on this one, if the 25th comes and you start to see this one dip, buy the damn dip. Because what we saw on earnings this time, they're not going to restate. I don't think they're going to restate earnings this time. I think they're going to restate earnings back here. And that was the hype rally. Okay? But I think you buy the dip on this one. I really do. I don't think you buy it right now. I'd like to see this one come in under 45. If it comes in under 45, I might put some money into that one. Again, I like this one. The high is 122. And if you believe that they will keep their listing, because if February 25th comes around and these guys keep their listing, I think you've got a major opportunity for this one to pop back to 122. Okay. Let's see. GROK 3. Ken and Megan. This dude, I think he manages like $10 million for himself or something like that. I'm usually not that impressed, but I did read some of his stuff. And I didn't think this was a joke. He asked SOFI, or he asked GROK 3, what's SOFI worth? $30. It went into detail. Again, use the tools that are available to you. This is totally available to you. GROK 3 is free for everybody. I mean, let's look at SOFI. Where's SOFI trading? If you think that SOFI is a great one, it's trading at 16. GROK thinks that it's worth $30. $30. It's an opportunity. Go and research SOFI. Know what you're getting yourself into. Is it guaranteed that this stuff is right? No, but again, use the tools that are out there. Now, if you want a strategy on QQQ, TrendSpider, their combined RSI ensemble uses multiple RSI lengths. Go and research RSI, its relative strength index, to color code overbought and oversold conditions. The QQQ daily strategy buys on the first oversold exit and exits with a 5% trailing loss. You can import the indicator right there. It paints it so that your stock chart will look like this. And look at those gains, 28%, 20%, 13%, 8%, 11%. It has you in at 508. The NASDAQ is at 540. Look at those gains. Again, you can get this. TrendSpider. Go to my Linktree, linktr.ee. You can get a 2-week trial for under $20. Then you go over to Twitter and you import this. Go to TrendSpider's Twitter and go and import things. Then you just geek out and try TrendSpider. It is the one tool. If I had one tool to actually get, it would be this. And the reason is, time. Okay, I like setting alerts. I don't like sitting and staring at charts. I can set alerts. On every plan, you can set alerts. Okay? 2, I like having watch lists. I have watch lists that I provide. If you sign up for an annual plan, you'll get all these watch lists. Okay? I love having watch lists because I can scan against them. Okay? 3, I like using the back testing. Okay? Back testing, it gets a little bit different based on the platform. This is why I move you to enhanced. Okay? Enhanced. That's the one I like, enhanced. And that's for me, that would be the one that $40. I mean, $20 to try this one out, $40 to try this one out. Again, it's 2 weeks. 2 weeks. Go to Linktree, LINK, and try it out. And sign up for an annual plan. Then the benefit of that is you get my 4-hour algorithm. You get my 65-minute algorithm. You get all my scanners to try and find bullish stocks. Okay? Look at SOFI. It got you in here at 15. You're trading at 16.20. This one gives you 102% over 24 months. 24 months. That's 2 years, 26 positions. It doesn't get you in and out a lot. This is one where you can get an alert every day and you're sitting at work and boom, it comes up on a text and you say, oh, I've got to buy SOFI. Let me go into my Fidelity or my Webull app. Webull is great for stuff like that. Put $1,000 into Webull. I did. Go over to Linktree. Okay. It's the link right down here. The 5th link. Get 75 free stocks and get started. I love Webull. I love it. It just makes it so easy. I've turned $1,000 into, I think it's 11,400. In the past couple of years. It's been good. It's my gambling stuff. So again, a strategy for QQQ. I gave you one yesterday. Go and try out TrendSpider. Now, one that TrendSpider will not help you with is the shitty solar industry. Okay, Solar Edge targets, they popped on earnings yesterday. I'm gonna look at this chart. Just know this one holds a special dagger in my heart where I was up 30, 40, 50% on SEDG. And I doubled down and I didn't win on this one. I absolutely did not win. See that loss right there? I sold here. I saved myself from 83% loss, but I didn't make money on this one. Again, it was 44%. I was trading in this range. I keep this note up here so that I am reminded This is just a shitty stock. But look, does this mean it's turning around? Personally, I don't think so. I mean, you know, if you look at yesterday and we look at a 5-minute chart of yesterday, we see that the gap up here, okay, you were trading at 17 and it opened to 22. It went all the way to 23.77, almost 24. It never hit that again during the day. Okay, gaps will get filled. I don't like the stock. Add to it, I don't think this administration is going to continue to be a proponent of solar. SEDG, for me, not a buy. It was up 30% yesterday at one point. It wound up being 15%. It's just going to give it back. But again, you have to have a strategy. If you had a strategy, maybe you played the 4-hour, because the 4-hour algorithm had you in it here at $14. And if you played the strategy, again, I just said gaps get filled. Well, look, you had a gap here from January 7th, a gap around 1644. Anything under this, you would have filled the gap. Gaps get filled. You know, this gap back here, you could have bought this $10 one, seeing this gap up here. I like playing gaps. You know, gaps, I always joke. Gaps are gap shots are old men at the pool with their swim trunks on, where they spread their legs on the lounger. Dude, you're getting a face full of testicles right there. Gaps like to be filled. Inappropriate. Inappropriate, yeah. My glory hole thing yesterday was inappropriate. I apologize, but Solar Edge, not my thing. Now, Microsoft, this is my thing. It didn't shoot up yesterday because they announced that they had created a quantum chip. What did shoot up? All of the damn quantum stocks. 4%. Rigetti in pre-markets up 9%. IONQ's up 4%. Quantum Bit, QUBT is up 8%. They're up again today. And Microsoft, for me, I am investing in Microsoft and Google because my risk tolerance doesn't like IONQ, Rigetti, QUBT. I want a company with good earnings, with good products, with good management, and good profits. And that's the problem with these stocks. Now, you could make a damn good living trading IONQ. And maybe you want to trade it on a technical strategy, because here's the thing. My 4-hour algorithm makes you 552% over the last 24 months, 26 positions, including this one that made you 323% at the end of last year. Got you in at 7 before all of the quantum hype, and boom, 323% in that one trade. Okay? It's going to get you in again today or tomorrow. And their earnings are coming up next week, February 26th. But it's not within my thing. I own Microsoft, which is in the quantum space now. They just clearly put themselves in the quantum space. And I own Google, which put themselves in the quantum space. So know the stocks that you have. Know the stocks in these hyper parabolic kind of move. Stuff like AI, like quantum, like nuclear, all of that stuff. Now, Bank of America, TrendSpider in their pre-breakout consolidation scan, this is looking like a textbook volatility contraction pattern. Go and Google it. Set up against all-time highs. Bank of America, is it a buy? Let's go and look at it. You know, Warren Buffett's trimming this one. The algorithm got you out with a nice 3% gain. How does the 4-hour algorithm perform? Well, over 24 months, you have 22 positions. 22. And see down here at the bottom, the 4-hour algorithm on this particular name, it wins 50% of the time. Your average win, 5%. Your average loss, 1%. That means you make 42% over 22 positions versus buy and hold at 27%. If you look at this one, it's been in this trading range. I would be looking at 44 as a support level to make the move higher to all-time highs. I like the stock. Does Seeking Alpha? I don't know. I think it's a hold in Seeking Alpha. Yeah, it's a hold in the quant. It's the valuation and profitability. And you can read the AI report. Wall Street thinks that this is a $52 stock. That would be an all-time high because the 52-week range only goes up to 48. Is that one setting up? Again, does it fit his strategy? What do you want? I buy and hold Bank of America, but I use the algorithm to try and get me into it. I do have a very small position in that one, by the way. Now, we talk about insider sales all the time. Are they bad? Would you say that you wouldn't want to have had bought any of these stocks, DoorDash, Palantir, Carvana, or Meta? Those little sales right there, you can put that on your charts in TrendSpider. This is a TrendSpider chart that they did. And they said over the last year, let's look at the insider sales. There's no damn buys. Nobody within DoorDash bought. Nobody within Palantir bought. Nobody within Carvana bought. Nobody within Meta bought. They all sold. And the stocks still soared. Again, use the information that's out there. Don't let analysis paralyze you. Paralyze? I don't know. But insider sales, they're not always bad. They're not always bad. You can even look at insider sales during Moderna and Pfizer when those CEOs were making billions of dollars in profits by selling $10 million of stock a day and the stock was going up 30%. You can look at that. One stock that continues to just boggle my freaking mind is HIMSS. It was up 17% today or yesterday. Hims and Hers buys at-home lab testing. You can go out there, use the tools that you have. Go to Twitter. Okay, we're just going to go to Twitter and type in $HIMS. Okay, HIMS. And just look. Just look at all the Hims stuff that you can get. Now, do you want to rely on Twitter? No. Go to an actual place that will provide you a solid core like FinViz or an AI platform. Don't look at opinions. Look at facts. Opinions are fine. And if you find that you like Hims, maybe you want to trade it on a technical standpoint. Okay? Maybe you want the 4-hour algorithm. Because the 4-hour algorithm, it still makes you 238%. You're in at 27. Okay? On January 6th, the algorithm got you in at 27. I was saying 25 was your support. You did dip to 25. The algorithm didn't get you out. You're at 68 freaking dollars at the close yesterday. It's 66 today in pre-market. Is it extended? You better damn well believe it's extended. I mean, that's just parabolic ever since January 13th right there. It just shot up. It got to its all-time highs. It used it as resistance. It then turned it into support. This is a classic view of a chart where old resistance turns into new support. Is it going to get back down there? I don't know. I don't know if this is a short squeeze. I don't know if this is just a product thing, but they trade 982,000 shares yesterday. Okay, short interest is 27%, which is enormous. The quant has it as a hold. Wall Street says it's a $31 stock. That's 53% downside. So I am done with this. I personally, it doesn't fit my risk tolerance, but if it fits yours, great. Now, I posted in my paid newsletter about AXON. Okay. And here's a stock. This is from the newsletter. Here's a stock to add to the watch list. Last year, this was a big social stock, and they are doing a ton with AI and paperwork in the police force space. It's interesting. And I posted that. That was 2 days ago, I think. Maybe it was Monday or so. And they immediately shot up. Not that I was moving it, but yesterday in the 4-hour algorithm, it was interesting. You can see the morning candle was down 7%. The afternoon candle was down 8%. This was a huge loser yesterday. Huge. Is it because it just ran too much? Are people taking profits? Well, it's still a buy. AXON downgraded on competition concern from partner. That's what happened. It was downgraded by Northeast Research. When you look at Wall Street, what do they think the price target is? $635. That's a 7% upside. So there's 18 analysts that cover it. I think it's interesting. I wouldn't have wanted to buy it up there, but I did say put it on a watch list. Is this one that will pull back to this gap? We've got earnings coming up February 25th, and you've got 470 to 509 as a gap. interesting. Again, if you want the paid newsletter, it's in there. Here's the actual newsletter. AXON is interesting. The title of the newsletter is, let's see, it was February 17th, Robotics, Where are the Opportunities? AI stock that is cup and handle. That was AXON. So I thought that was super, super interesting in that this is on a watch list now. Now, the other thing that I said in that newsletter is robotics. Robotics is a theme. SERV was up 13% yesterday. They'll start delivering takeout in the Miami metro area with its partnership with Uber Eats and an existing partnership with Shake Shack. Okay, this is a company that Wall Street, it's not covered by the quant, but Wall Street says it's a strong buy. It's a $587 million market cap. Just understand, this is hype at its best. When you go to the financials and you look at this, they have very little revenues, $1.7 million. At a $587 million market cap, that's 587 times forward revenue, not earnings, because there are no earnings. That is a huge, huge issue. So, but if it fits within your risk tolerance and you want it, go and get it. Wall Street, there's 4 analysts that cover it. They think it's worth $16. It's 25%. And and remember, it's a new stock. So if we go over here and we say, okay, what if I just want to trade it on the 4-hour algorithm? Well, the 4-hour algorithm does phenomenally well. Okay, over the last 10 months, it's 10 months old. There are 9 positions. 9 positions. You only win 33% of the time. But the big wins are the hype wins. And you can see it. Look at this win right here, 539%. Look at this win, 24%. Look at this win, 98%. Now, did it have you in for this pop? No. Today in pre-market, it's down 1.42. It didn't have you in for that kind of pop yesterday. But again, it was 13%. Now, Qualcomm. Let's talk about this. I just can't believe Qualcomm was up almost 1% yesterday. With Apple confirming they're getting out of the Qualcomm chip business. Now, here's the thing. If for some reason this damn chip in the 16E doesn't work, expect Qualcomm to go just shooting lights out. Honest to God, I'll go over Qualcomm with the paid members. I will go over that. And what do we have next week? We have NVIDIA earnings next week. NVIDIA earnings. Blackwell demand remains unfazed by DeepSeek situation. I am going to go over NVIDIA for the paid members. Now, I always say find a strategy. Well, here's one. I was on Twitter last night. He posted this last night at yesterday at 1:07 p.m. I think it was 10 p.m. last night. And I had a nice little chat with Ronnie. I didn't follow him before this. I didn't know him, but I saw this. Oscar Healthcare is my healthcare provider. He just bought $100,000 of Oscar. This could be Palantir, Hims, or Hood. And find out why. He put out a 21-minute video. I thought it was funny because down here, he doesn't call out Seeking Alpha. But anybody that knows Seeking Alpha, that's Seeking Alpha right there in the bottom left of his video. Just so you know, I don't think he ever calls it out in the video. But Oscar, let's go and do it. Let's go to Perplexity and let's see is the stock of Oscar Healthcare, OSCR, a good buy right now. Let's see what it says. Answer. Oscar presents a mixed picture for the potential investors with both positive and negative factors to consider. On the positive side, Oscar Healthcare reported its first profitable year in 2024. Now, I haven't looked at a chart on this. There are several concerns. The margins, Oscar's operating margin is only 0.62%. Stock performance, the stock has delivered approximately 20% over the past 52 weeks. That's over 1 year. Current stock price of $13.06 as of February 13th. So it's not up to date. It's not up. It's not up to date. Analyst rating. Some analysts have it as sell or underperform with the price targets as low as $12. Recent earnings miss. Oscar Health results in 2025 guidance fell short of analyst expectations, growth concerns. Given these factors, investing in Oscar Health carries significant risk. That's how you use this tool. Now, how would I use the tool? Okay, I've got every tool in front of me. Well, let's look at a free tool, Oscar. Okay, we go over to FinViz and we can see Oscar's in a downward trend. Downward, I mean, that chart right there on FinViz just puts it in a downward trend. You can see it. It's a downward trend with a recent bump. Okay, $3.9 billion market cap. They have they don't have cash on hand. Earnings per share minus 0.2. Short interest, 19.23 million shares. Short float, 11% of the float is shorted. Average target price, $20. It's trading at 15. Trading at 16, $15.99. We can see December, Jefferies underperformed, $12. November, Bank of America Security underperformed, $13.50. October, UBS neutral at $23. So that $20, take it with a grain of salt because they were running up last year with it. Okay? What happened on Tuesday? You can read the Insider Monkey. You can do all of that. For years, I used this. You can see there were some people that were buying last year in big lots. I mean, that's $1 million. That's 1.2 million. You can see these guys buying it at this price last year, 2 million, 5 million. You know, there are buys at this price where people are buying and at large quantities. You can see 3, 5, 5, 2. There is a large buy at those. And here's some proposed sales at 17 and they started selling at 18. You know, that was in December. We're seeing a proposed sale here, $14.79 on February 10th. They haven't pulled the trigger on it, but it's $532,000. The sales are significantly less than the buys. So maybe management and insiders actually believe in this stock. That's how I would look at it. Then I would go use a charting tool. I would use Thinkorswim or something like that to try and find a strategy that maybe works. Those are all free tools. You can go over to Twitter and just type in OSCR. Here's how I would do it. I would use my 4-hour algorithm in TrendSpider. Okay? I would say, let's look at this one. Well, I can see that 23, I put this in last year because I said, hey, that pop right there, maybe that's that $9 right there. Maybe that's a support level. And you can see we just got the 200-day. It's below where the stock is trading. Maybe this one's going to trade sideways. If I had to put in a line today, I would say that this right there at 13, that's your support. And I want to buy anywhere between 13 and 9 because $9 may be a very good buy for this one. You can see the MACD's low. You can see that. But in the meantime, the 4-hour algorithm actually look down below. The chart's not up there. So just point your eyes down below. Performance chart over the last 24 months. You've made 279% in this stock. Over 26 positions in the 4-hour algorithm. Okay? 26 positions. What do you get with buy and hold? You're up 303% over 2 years. That's a pretty good strategy. Okay? That's not a bad strategy. Just got you in at 1630. You're in at this one. In pre-market, you're at 1648. So it's not soaring. It's not up there. Your MACD below the oscillator. Your RSI, it was coming off down here at 13. Remember I just put that 13 in there? Well, look at where it bounced off just a couple of days ago. Okay, and then you gapped up. So it's an interesting play. Again, I would do that. And then I would go over here and I'd say, you know what? Let me go and see what the quant does. The quant says it's a hold. Has it been a hold for a while? Well, it was a strong sell back here at 13, and then it popped up and we moved up to a hold. Okay, it was a buy back here at 16. It was a buy back here in 2024 at 16 as it went by. It was a strong buy at 20. The quant just got this one completely wrong. So can I count on it? No, I don't want to. What does Wall Street think that it's worth? Well, they think it's a $19 stock. That's 25%. There's 7 analysts that cover this. But when you go to revisions, you can see over the last 90 days, 2 of them have taken their earnings per share up, 2 down. 3, revenue up, 2 down. So I don't want to trust those guys either because it seems like the most recent ones. So I want to go over and I want to look at the valuation. Is it extended? Well, the forward PE at 21, it is extended. They don't give a peg, so they don't have growth, but the growth is really good. Now, if I didn't know, but the momentum is horrible, by the way. Look at the momentum, 3-month, and I would argue that this is the number one thing. Now you go over here, analyze with AI, and we can see some of the competitors, United Health, Centene, Cigna. Those may be ones that you want to look into. If you didn't know what any of those valuations or growth or profitability, AI does it for you. This was just written on, let's see, 2/19. So yesterday, this was written yesterday. And you can read the positives and the concerns from Seeking Alpha analysts. Now, I like them as a healthcare company. I should say, I don't like them as a healthcare company. And I think healthcare companies overall, in my mind, to be a successful stock to buy as a healthcare company, you have to turn down claims. You just have to spend less than you actually make. And that's the way these make money. And so do I want to invest in it? I'm a little conflicted. I've made money on United Healthcare over the years. It was just a high-flying stock. This particular one, I would not be putting $100,000 into this. But Ronnie believes in it. And go and look. Again, he's putting a lot of money into this stock. For me, I'd trust the 4-hour algorithm making me 279% over 303% because I think that this is in a downward trend. And I think with that weekly 200-day just appearing, here I'm going to refresh TrendSpider. With that weekly 200-day just appearing in there, I think that you've got an opportunity to actually just, sit in and wait for a bottom. As it gets closer to 20, I would be adding to it. Let's pull up the 4-hour algorithm again. It just seems to be slow. I don't know if it's my internet or what, but we can run that one on Oscar Healthcare. Maybe it's just the feed or something. Oh, I probably should log that back in. But the tools that I just used, TrendSpider, we went over that one. You can get the trial. The tools that I just used, though, it was Seeking Alpha. And I would steer you towards that second link, which gets you a bundle. It's Seeking Alpha Premium. And you saw the research that I did. Again, you can use the free tools of AI and FinViz. But it's so much easier to just go to Seeking Alpha and look at the actual valuation of that stock. And this bundle saves you $159. Okay? It comes with a data-driven portfolio called Alpha Picks. You get a pick on the 1st and the 15th. And the performance, 180%. We just got some sales. They tell you when to sell. It's a rules-based portfolio. Click on the link, okay? You can find out more about Alpha Picks. You can go and look at it. If you just want Alpha Picks, again, on Linktree, you can get Seeking Alpha Premium, which is you can get a free 7-day trial of Premium if you just want Premium. If you just want to look at the quant rating, if you just want the AI analysis, if you want to import your portfolio, you want to look at top stocks, you can get that. And you can also just get Seeking Alpha Picks. Again, it's all on Linktree. You can click the bundle, then the Seeking Alpha Premium and Alpha Picks. You can find out more information. And again, remember, get Webull. I mean, Webull's just the no-brainer. It's such a good mobile app. And here's the newsletter. The newsletter is free. But I will be going over paid members. We're going to be going over the core portfolio stocks, 10 of them that I think are a good opportunity. We will be going over earnings. We will be going over NVDA, a top quant stock that just is the top S&P. It just changed. For some reason, the top S&P quant stock just changed. And I don't get it. I think it's funny, but I think it's interesting. And an undercover AI pick that I found. So if you have any questions, again, Linktree has all of my contact information. Go over to the newsletter. You can chat with me. Chat's up in the upper right-hand corner or download the Substack app. Okay. Take care. See you. Bye.
I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. ears.